Good morning, everybody. Happy Friday. My name is Gareth Soloway, and I'm here to deep dive into the market based on technical analysis, fundamental key things, as well as a few other factors that we're going to look at. Again, no hype, no emotion, just focused on the data to give us a clear picture of what's going on. It's been a wild week. We've seen inflation numbers starting to pop up. The Fed is next week expected to cut 25 basis points, but ultimately, are the markets just getting started on another rally up? Or are we going to see a top in the markets? Let's explore that data. And first and foremost, we'll come over here and take a look at the chart of the pre-market S&P 500. So what we saw yesterday was a downside move. This was after the PPI data came out and basically surprised at much hotter than expected. So again, inflation is roaring back. We're seeing that. And this is before any tariffs are implemented as well, which historically have been very inflationary. So again, we are seeing that weakness in the markets yesterday, but then after hours, we saw Broadcom report earnings. And Broadcom reported earnings. Initially, the stock rallied to the upside, then it faded back to the downside and was basically unchanged to just slightly positive. Then they came out with guidance, and their guidance was about as robust and positive as could be, and the stock ripped up and is currently up, I believe, about 16 to 17% pre-market. Now remember, this is a stock that was just underneath $1 trillion valuation, so this move, if it adds about 15 to 20% today, it's going to hit $1 trillion market cap and join the 7 other stocks that are $1 trillion in the current market, all right? So the Magnificent 7, it might be the Magnificent 8 after today. Now you can see what happened is as soon as this is right where that guidance came out, right here yesterday in the after hours, and you saw the markets kind of go up and then trend, and then by this morning, everyone was in party mode and the markets have continued up. So we are looking at a positive open on Wall Street led by technology. And again, technology stocks have been strong, but we've seen pockets of weakness, right? We've definitely seen Tesla carrying its load. We've seen Apple doing very, very well, but Apple did put in a topping tail on the daily chart just a couple days away, which is a reversal signal. Now, one of the things I continue to watch here on the NASDAQ is this bigger chart here. This, again, takes your COVID low down here, right? So, again, our COVID low and your bull market high of 2021, your bear market low of 2022, and we are now, based on this, about 250 points away from tagging this upper line. Well, guess what? The NASDAQ right now is up over 150 points. So, are we going to tag this on a Friday today? Will we see the NASDAQ up as much as 250 points on the day, tagging this line? If it does, I have no other choice but to use the technicals to dictate that next week and going into the new year to have a negative bias on the markets and look for that pullback. In fact, we're getting very close to where I'm going to initiate that put position on the S&P, maybe on the NASDAQ as well, based on what I'm seeing in the charts. Now, a couple other things that I wanted to talk about here, folks, is that what we're seeing is some unprecedented breadth being negative in the markets. In fact, for the first time in 25 years, all right, actually about 23 years, we saw something that has, again, not happened since 2001. It was 9 straight sessions of stocks net being negative, even with the market making new all-time highs. Now, what do I mean by that? Well, if you look at advanced decline, there were more stocks declining in the market for the last 9 days than advancing for 9 straight days. The last time that happened was in 2001. So little things like that. It's showing kind of this market that underneath the facade of greatness of, oh, look, Tesla's making a new all-time high. Oh, look at Apple making a new all-time high. Look at Google. Look at all these other stocks. Look at Broadcom today. There's this weakness that is becoming very pervasive, and that can be a sign of trouble lurking in the markets. All right. Let's take a look at a couple things here. First and foremost, let's look at the 10-year yield. And the 10-year yield on this inflation news this week has continued to climb. It is not back to its key retrace to the scene of the crime level, which was right here. You can see the wedge pattern where, again, that was resistance. Look at how price got rejected. But again, we are seeing it push back up towards resistance here at around 4.4%. And if it gets through there, we could touch 4.5%. Now, in general, I expect the markets to basically start to weaken due to economic concerns. Now, one thing, and it wasn't talked about much yesterday that I'm keeping an eye on, was the jobless claims. Now, again, PPI overshadowed that, CPI overshadowed jobless claims. Jobless claims are a weekly number. It's how many people are filing for unemployment. But we did see a number yesterday that spiked to 242,000. Now, 242,000 by itself is nothing major, right? It's once it gets above 250, if it stays there for 4 consecutive weeks, that's a warning sign. And then anything above 300, that's where you start to say, uh-oh, now a recession is most likely on the horizon. So watch that. We're only at 242 per this last week, but let's see what the next week number is. Now, it could be a little skewed because of the Christmas and New Year's holidays, but nonetheless, let's watch into January. Are we starting to see layoffs increase and people filing for unemployment increase? Okay, back to the charts. The U.S. dollar has also gained strength, although it is down just a little bit. But notice, just like yields, it is off of its short-term resistance high here and doing a retrace. In general, again, just like I mentioned, I don't think yields are going to 5%, and I'll tell you why. So, just one more thing here on yields is that what we have to understand is that the U.S. government is already paying $1 trillion in interest on the national debt. If interest rates go up, it will literally bankrupt the U.S. even faster than we already are going in that direction. By the way, when I say the U.S. government, I really mean us taxpayers. All right, we are paying $1 trillion, wasting $1 trillion a year now just on interest payments. Now, you can justify spending from the government when it's going into construction of bridges and streets and this and that, but when you're paying interest, it is totally wasted money. It's going out of the country with no benefit in terms of stimulative impact. And that's really the crux of this. And the higher rates go, the bigger those payments are going to go, and ultimately the bigger the U.S. debt will go as well. So just keep that in mind. All right, let's get on to Broadcom here. Broadcom is trading sizably higher here at $213. This is after closing around 180 yesterday. So this is a massive move for a stock of this magnitude or this market cap size. For me, what am I doing here? Well, I had a level that was around 200 and it blew right through that. So I had to go back to the drawing board and say, okay, well, how would we find our next level? Well, what I did was I said, okay, it looks like a parallel trend line, or let's do a trend line here, right, connecting through these lows. All right, so in fact, I want to just do it from this low here. We're going back to October of 2023, and we'll connect it here. Now, if we raise that all the way up to this high here, we start to get a parallel channel, right? So again, you can see here was this gap down. We gapped down, we rallied above it. This was your September flush on, and then we got right back above. Notice, if you know the methodology, we never confirmed below, so that's why that trend line can be pierced, because you never confirmed below that trend line on either occasion. Now, if we bring this down, and we say, okay, well, what price is this at? Right up in this range, and we go up here, it's right around 220. So 220 today, which, by the way, if you told me that we'd be talking about 220 on Broadcom this morning, I would have said you're crazy. But here we are at 213. We're not that far away. 220 today for me as a trading level for a short. That would be the level I would focus in on. All right. Now, Costco also reported earnings. The stock almost did nothing. It was almost a non-event. They basically beat earnings. They beat revenue by a little bit. But the kicker here was that Costco did say that the consumer is continuing to be very aware of their spending. And for me, with a stock market that is creating a wealth effect, when consumers are already aware of their spending and being a little bit careful, it tells me that we're just one step away from a consumer that is then slowing their spending habits if the stock market stops making new all-time highs. So in either case, going back to the chart here, Costco again is trading down just a little bit on earnings, just a tiny bit. But the bigger question is, on this chart here, this is what I'm focusing on. 2 days ago, Costco put in a topping tail. It's a reversal signal, pierced the even number of 1,000, which historically even numbers. We saw this on Bitcoin just recently with 100,000, then pulled back to 92, 91,000. This can mark short-term pivot tops. And sure enough, Costco yesterday was up, closed lower, and then after hours, we are seeing Costco move lower. So I am bearish, net bearish on Costco. Where do I think it could fall over the next couple weeks? Well, you have no other place to go than this long-term trend line. I mean, really amazing trend line. I'd be looking at kind of around the $915, $920 level as downside support. It won't get there today. In fact, I'd be very surprised if it did. But again, over the next week or two, I do think it could trade down to $915 to $930. Now, RH, big move on RH today. Monster rally right after earnings. It is fading a little bit here, so just something to keep an eye on. But again, overall big move. Remember, RH is the old Restoration Hardware. It was Restoration Hardware back in the day. They changed their name just to RH, but essentially it's kind of like a it's hard to say. It's kind of like a home decor, home building kind of place to go. I mean, some of you guys have probably been in these stores. The point being is it's up sizably, right? It's trading at 430, traded as high as 465. If we look at the chart here and we zoom out, where is the only level? Again, I was looking at this yesterday in the after hours in trading the close, and I just do not have a level until a gap fill around 495. So, I mean, again, it's a smaller stock, so it could always go up there. And by the way, I know the price of the stock is not small, but that doesn't equate to market cap. Always remember that. You know, you could have a stock that's $1,000 per share, and the market cap could only be $10 billion versus, you know, a smaller stock could be a $1 trillion name and be a $100 stock, right? So, again, always remember that. But really, 495 is the only level I'm seeing on Restoration Hardware at this point. Now, take a look at this chart here. This is the chart. In fact, we'll go over to the big board. This is one of my big bear plays for 2025. It's Apple. All right, now Apple, again, you have the issues of China where we're likely the U.S. will be levying tariffs. There's a huge amount of sales for Apple are coming from China. So any sort of tit for tat, you know, repercussion to tariffs is likely going to impact Apple significantly. In addition, Apple talked about this big upgrade cycle that never materialized, yet the price of the stock has kept going up. There's a big disparity now in valuation of Apple. Part of it is that Apple is in something like 400 ETFs, so every time someone puts $1 into one of these ETFs, a large chunk of that is going to Apple, and that's keeping the stock price up. But Apple, my friends, this is now getting to ridiculous valuation levels for something that is barely growing more than 5% at best per year. Again, having a PE forward PE ratio in the mid-20s, very insane for this sort of growth story. Now, again, the kicker here is if we look at this chart, 2 days ago, it also put in a topping tail. I have this little trend line right here that kind of connects these lows. That also marks a little short-term level. I would be looking for a pullback on Apple. Again, into year-end, it's hard to know, but starting in January, look for a significant fade. 235 would not be significant, but I think it eventually hits that, bounces, and then breaks to the downside. All right, so we'll keep an eye on Apple here as we go into the new year. Let's go through a couple other key charts here, Bitcoin being one of them. Bitcoin is not moving much today. We have our parallel, which remember, as long as we stay within the parallel, the bias remains bullish with upside to 107 to 108,000. If it breaks the parallel, it goes to a neutral bias. Now, why not negative? Well, because you still have the support that you've been bouncing at 91 to 92,000 right here, right? So you can see right here, it hammered on it, broke out, retraced, went up, retraced, and so forth. So this level here between this trend line, upsloping trend line, and this one, this is your neutral zone, meaning that, again, it's more of a 50-50. Can it recover and still go up, or does it break down? Once it breaks down below 91,000, that's where the bias goes heavily negative, all right? So again, bias right now is bullish, but you know your zones as a trader, as an investor, know your zones of when it's bullish, when it's neutral, and when it's bearish. That will help you trade it appropriately. Gold today, pulling back just a little bit. Again, we had the negation of this wide range red candle. Then you get your couple-day pullback. I would expect it to turn back up next week and gold to head higher here. And again, we'll keep an eye on that. The only thing that would change my opinion on gold here, if we break this bigger parallel right down here around 2,600, if we get below that, then the bias heavily sways to the negative side for a move down towards 2,500. But right now, again, small retrace. Look for that to turn back around over the next few trading days into next week and head higher. Silver has remained bearish the entire time because it was never able to break out. And look at price. It's nearing technical support. Again, maybe you get a small bounce off this, and then I would expect silver to break down. Palladium, platinum, same sort of things, guys, is that these charts are definitely more skewed towards the industrial side, and if silver breaks down, those likely go lower as well. Oil today, let's take a quick look at oil. Trading flat to positive. It did get above this little line here, which again gives it a more neutral to bullish bias for a potential rally to about $74 per barrel, at which case, like I've told you guys, I would be interested in shorting oil at that price. Natural gas still just chopping around here, not much going on, just a lot of sideways chop here, so nothing really in that respect that I'm keeping an eye on. But let's come back here. Now, the key is this. Next week, we have the Federal Reserve meeting. That's Wednesday at 2 p.m. they'll release their interest rate decision, which again, I would say there's about a 95% chance that it's going to be a 25 basis point cut. The kicker is this, right? The markets are already factoring 25 basis points in, right? So there's going to be no surprise there. All right, the markets are already priced for that. What the markets are going to look for next Wednesday is in the 2:30 press conference, is Jerome Powell more hawkish, meaning is he saying, hey, don't even expect more than one rate cut next year, or is he more dovish saying, hey, we might do 3, 4, 5 rate cuts next year? That is going to be what's going to move the market next week, all right? So again, what does that mean for Monday and Tuesday? It means it might be light. Volume could be very light Monday, Tuesday into Wednesday, and then we get that big decision. Once we get through that, then you're going to Christmas and New Year's, and obviously the new year comes at that point when we'll get the new jobs data as well. All right, so that'll be what I'm watching for today is Broadcom's reaction, the NASDAQ potentially hitting that key level around 20,150 to 175. Do we get there? That'll be big resistance. And also remember, I mentioned the cycle date. We're right on the verge of that. The market breadth is a concern. There's lots of issues underlying in the market that are being masked by big moves like in Broadcom that are helping get the markets up. Be careful here, folks. Getting into the new year, it could get tricky. All right, have a great rest of your week, guys, or weekend. I'll see you on Monday bright and early. You guys take care.